Hello there, this is James, and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Tuesday. In today's program, I want to basically have a quick chat. It's more of a follow-on on what we were talking about this morning, and how just a little bit of data can change the market's mood, should I say, like that. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, that's better. Let's get started. So yeah, I just really want to sort of discuss what a little bit of data and how that can sort of change the market's mood. I'm not going to say it's changed the market's mood permanently, but certainly in the US session, it's changed its mood at the moment. Because don't forget, this morning, we were talking about the market having a lot of anticipation, a lot of hope that the Fed will start being soft with interest rates coming, not tomorrow's decision, but in December, and how that gave a little bit of hope to the market and gave a little bit of dollar weakness. However, we've had some data come out, which is not so scary and it's actually reversed a little bit of the market's mood. For example, we've had the US ISM manufacturing PMI. It was announced at 50.2 versus 50 expected. Don't forget the previous reading was 50.4, so lower than the previous reading, but still better than anticipated, showing that the slowdown in manufacturing is not happening. As well as that, we had the job opening, okay, and that was announced higher at 10.7 million versus the 10 million expected. These are new job openings, jobs available, okay. The previous reading, though, was actually 10.4 million. So today's reading is even better than the previous meeting, showing that the labor market is still extremely, strong and robust, hence the change in mood. At the same time, at this very moment in time, we have the FOMC. The meeting has begun. So they're obviously discussing the market over tea and biscuits. Who I'm kidding, they're Americans, probably coffee and donuts. But they're discussing what's going on at the moment. And anticipation, yes, they are going to come to the 75 basic point tomorrow, most likely. But will they be dovish in their statement? Now, here's the thing. Here's what the banks, a number of the banks think the maximum they get interest rates to. Barclays think they get it to 5.25%. Bank of America, 5%. Goldman Sachs, 5%. Morgan Stanley, 4.7%. And JP Morgan, 4.75%. Okay, so that's where they think they're going to get interest rates before they stop the hiking cycle. Rates as they currently stand at the moment is 3.25. They hike by 75 basic points, okay, then that's 4%. So they could do 50 in December, okay, and then maybe 25 in the first quarter of 23 to get it to 475. Or if 5% is the target, they can then do another 50 again, can't they, to get it to 5%? So, but anyway, the market is basically taken as stronger dollar at the moment. We'll have a look at the market at the moment. The stocks have given up their gains they made earlier in the session. And like I say, we've got a strong greenback because, again, this data is also at the same time sort of giving the impression that the US economy, especially the labor market, is in a very good, healthy state indeed. And don't forget, tomorrow is the big one. You have the interest rate decision due at 6 p.m. UTC and the press conference due at 6:30 p.m. UTC. So don't forget, that's a big, big, big event. But like I said, the outcome of this data at the moment, I'm not going to say that it's going to continue this way, at the moment is dollar strength and the hope that the Fed might be gentle, even though we said we looked at it, they can be gentle-ish, is beginning to wane. But let's have a quick look at the market and see how things are looking at the moment. So first of all, it's the euro, okay? The euro was trading above the 99 handle quite comfortably. But since then, since the ISM and the jolts came out, We're now back around the 98 handle, currently trading at 98.736. So dollar strength once again. As well as that, we have a look at the cable, British pound. Again, look at this drop off here. We were trading around the 115 handle. Remember this morning when we were talking about it. It's now currently trading under the 115 handle, currently trading at 1.1464. So again, dollar strength there. Dollar yen. Okay, we look at the daily. Again, we've got dollar strength on the back of that, trying to get, bounced off that Fibonacci level of around 23.6. Key area of interest, 146.81, potential support. Currently trying to get above the trend line there. Currently trading at the moment 148.21. So dollar strength there again. The S&P 500, as you can see, this is 30 minutes. Again, on the back of this data. Again, like I say, what a little bit of difference data can make. All the gains have been trimmed. Currently trading out 3,847 points. Gold as well is the same. Again, back under pressure, but if we look at a bigger picture on it, it's still ranging between that potential area of support, $1,615, and that potential area of resistance, $1,667. So that's where they are. They're, like I say, very changed. Again, this simple bit of data, so excuse me, simple bit of data can just sort of change the general mood of the market, and that's what's happened here. It really has. So, yeah, like I said, I have no doubt tomorrow, most likely, the market may change its mood again as we get the build up of the interest rate decision. And like I say, more importantly, like I said this morning, the big one really is going to be the press conference, how they're going to be dovish. But like I said before, if say the Bank of England, a Bank of America is right, and Goldman Sachs is right, and their target for interest rates is 5%, then basically their rates, if they at the moment it's 3.25 and they hike by 75, which is 4%, it does mean they can do 50 in December and 50 again in quarter one of 23 to get to a target of 5%. The only way of them being aggressive is if Barclays is on the money and they have to get to 5.25. But like I say, there's still plenty of leg room. So I think the market will still get pretty much what it wants. But like I say, again, at the end of the day, that is good or better than expected data, which again has soured the hope mood a little bit today. So what else is happening? Okay, yeah, earnings season still continues. Still continuing, don't forget. We've got some big ones coming up, especially this month. We've got Disney coming up, which is going to be really fascinating to watch, especially after Netflix surprised the market. But today we had Uber, and it picks up a little bit. Though its loss was, it had losses and earnings per share was lower, its overall revenue, though, was 72% higher year over year. Knock-on effect for Uber, as they carried on driving forward, is the shares was nearly, were up by nearly 13%. So let's have a quick look at Uber right now and see where they are at the moment. Uber. Let's have a look. Where are they? Let's have a quick look-see. Here we go. Day on day. As you can see, they were closing below the $26.30 on the back of that better than anticipated, overall revenue, which was beyond the revenue expectation of the analysts. It is actually open with a gap and currently trading just around about $30.17. Other earnings today we had out today as well. We had Pfizer. They announced better revenue than expected. Their revenue was announced at 22.6 versus 21.3 billion expected. Knock-on effect for that, of course, was obviously a gap in the market again as well. A small gap, not as dramatic as Uber, but again, currently trading now at $47.15. Apparently, they made 4 billion extra profit on the COVID-19 vaccine, which they've had analysts priced in. So they're doing quite well. So anywho, so like I say, we have got some other events coming up. It's not all about tomorrow, but tomorrow's Wednesday, FOMC. But tomorrow is going to be pretty much the center stage performance. Other things we've got coming out, we have got ADP employment change, but again, that's overshadowed for the Fed interest rate decision. FOMC press conference as well, which I think will be the big one. Bank of England interest rate decision on the Thursday, which I think is going to be key. US ISM services PMI, US non-farm payroll, of course, and US unemployment rate. I will be doing a watch along price, small one for the Bank of England interest rate decision. And maybe obviously I'll definitely do a main one for the NFP, and I might do a little bit of coverage tomorrow night of the FOMC, maybe their press conference, maybe more their interest rate decision, which I think we pretty much know is going to be 75 basic points. The markets, the US equities, as they currently stand, like I said, have given up a lot of their gains. S&P 500 in the red, negative 0.51%. The tech is also negative 0.61%. And US 30 currently negative US 58%. So there we go. Just a simple change in this mood. Something coming in slightly better than anticipated can basically change the overall mindset of the market temporarily. Like I say, I think as the build-up comes for tomorrow, I think the market will keep, going on that hope of a very, more of a dovish press conference than a hawkish one, which we've seen in the past. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like, or tell me what you think. What you think the FOMC decision will be tomorrow. I mean, I think you all know it's going to be 75. But is it, are they going to be dovish? Or is this information, this data, this jolt opening, is it going to convince them that they can carry on moving forward and be more aggressive? Or maybe the banks are wrong. Maybe the main interest rate is not around 5%. Maybe it's higher than 5%. I mean, I think the crunch of the matter is, though tomorrow is going to be a big event, it all depends on when the next CPI reading is and what the next CPI reading is. Again, because if that still comes in hotter than anticipated, don't forget it came in higher last time. The market anticipated 8.1 headline year on year, came in 8.2, higher than anticipated. Core was also high at 6.6. If that continues to carry on, and the Fed can continue to underline their mandate and their mission to get inflation down to 2%, then, of course, the market may take a different turn for the worst again. But, don't forget, if you think of a question later, you can put it in the comment section, either on Facebook or YouTube. I will see them, and I will reply to it next time I go live on air, which, of course, will be tomorrow morning at 8 a.m. UTC. So please come and join me for that. And again tomorrow at 2 p.m. UTC to cover the US session. So please come and feel free to join me for that as well. Anywho, till next time. If you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video and you've liked it, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this little video, find it interesting, useful, and you put up with me and my over-the-top enthusiasm for the market, which I simply cannot help, and give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should they be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.